Hello and welcome back to another Insights. Trying to stay on track with some of this stuff at least. We're going to do a market update here on Wednesday when it's supposed to be done. So a little bit behind the other stuff with this illness stuff going on. So we're just trying to get back to normal. So starting off with a quote like usual. I just found this one today. Absolutely love it. Your success, mediocrity, failure is simply a reflection of your thinking. And this couldn't be any more true anywhere that I can think of other than the market. I mean, as you all know, mindset is the one of the biggest things. It's one of the biggest hurdles. It's one of the biggest things to overcome. It's one of the most important things you can develop with respect to trading. Learning to read charts, technical analysis, see patterns, learning option strategies, all that technical stuff. That's all static information. That stuff can be learned relatively easily. And it's not necessarily dynamic. It's not one of those things that changes. It's one of the reasons I love the technical analysis side. Patterns. They don't change. I got a book sitting right here on my bookshelf that was written in 1982 or 85, 87, something like that. It was in the 80s, I believe, about chart patterns and technical analysis. And it's just as relevant today as it was 30 years ago when it was written. And it will be relevant for 50 years from now as well. Same thing with the candlestick books that are sitting here. It's static information. It stays the same because the underlying is human emotion. And for thousands of years, human emotion has pretty much been the same. But that's the challenging part, is figuring out our own hurdles, our own emotional hurdles that we bring to the market. And that's the hard part. And as this quote says, it's simply a reflection of your thinking. And honestly, I've said that before, and some people get cranky. I had one lady that got super cranky when I said this on one of my online classes. I said, your account size, where it is relative to where you started, is simply a reflection of your skill level. Whoo, she took offense to that. She sent me a message the next week and said, man, I was really upset. I was so mad. I just couldn't believe you said that and thought that you were way off base, and that's just no way. And then she said, as she thought about it, she realized that it was right. And the hard part was the reality of her account and where it was. And she came back and said, I didn't want to accept it because it stung, because it was true for me. And it's true for all of us. Whether we accept it or not is a different story. And sometimes that's hard to accept. Sometimes you'll have a bad month or two. You start to question things. You go, man, and it's normal. It's not abnormal to have that. I mean, I've had bad months too. The last month has been not very good for me. But it happens, and you got to be prepared for those things mentally, and it's going to happen. It's going to take its toll mentally. And sometimes it's better just to, and I've talked about that extensively here, just walking away for a while. Just stepping back from the market, even if it's 2 or 3 or 4 weeks. I did for 4 or 5, 3 weeks, probably 4 weeks. Just because the market wasn't moving. I took a few beatings and I went, you know what, I'm just going to step away for a little bit and wait until it gets to where I want it to be. Give me the signals I want it to play in. And then I'll do that. But the funny thing is that lady that got all cranky, she goes, we were talking, it was the market mashup, and we were talking about mindset, and a lot of times we drift into that area. And she was the one who admitted that she was cranky the week before with me, but then realized that I was right, and she accepted it. And talking about the mindset stuff, and she sent in right towards the end of the class, she goes, you need to be saying this stuff every week to us. That's where I said, why come back once a week and only get an hour? You got 6.5 hours on advanced trading mindset. You can have me for the next 90 days, 24/7, whenever you want. Oh, that's a good idea. So she got advanced trading mindset. The next week, she said, I've been listening to it all week. It's awesome. And I just love it. And it's really helping me out. So, and that's good to hear. Honestly, a lot of that came from, my own bumps and bruises. Excuse me. Sorry, this cough is still lingering. I got the fisherman's friend in, but it's not helping. It is. Trading's tough, and we're coming up on my 16-year anniversary. So, and it's been a challenge all the way along the road. So don't be discouraged. It is what it is, and you get the hang of it, and eventually You have consistently good months, and then you have the bad ones now and then. But that happens. It is what it is. So let's get on to it. Oh, I had to pause that for a second and cough it out. Getting hot in here. Um, Wait, what's up with this? Did I miss something? See, I'm telling you, I don't. I know it's kind of crazy, and some people call me crazy, and that's fine. You go, how do you not know when? I mean, like earnings and all that stuff is important. Economic data, I look for the big stuff. But like news, I don't even pay attention to the news anymore. It just skews my object. It just I'm at a place where I can be objective. But the funny thing is I got away from the news because it was skewing my objective. It was making me less objective. It was making me, hang on to hopes and wishes and go, oh, the news is on this and this means it's going to go up or it's going to go down, and I want it to go this way, and so this news is going to make it do that, so I'm going to hang on a little longer. And so I got away from the news to avoid that. And the funny thing is I don't miss it. I miss it so little that I don't even watch it anymore. I don't need it, and it doesn't affect me. It hasn't changed anything for me. Actually, it's given me more sanity because I'm not listening to that stuff anymore. It's just noise. Most of it's just noise. It's just reporters. Most of them have no idea what they're talking about. They might understand what they're saying, but they don't really grasp it in a sense where they could trade it. Some of them maybe do, but anyway. I'm trying to figure this out right here, unemployment rate, why it's out on the 16th. That's usually out the first Friday. So this is kind of weird. I'm not sure why that's changed. It should have been out last Friday, the 4th. Why is it coming out Wednesday the 16th? That's weird. I don't know. That is something I'm going to ask about because I'm curious. I didn't know that was happening. Of course, CPI, housing starts, which could have an effect in the housing sector. So if you're in the housing sector, those are the kinds of things I look at. I just want to be aware of what's coming up. So let's see what else is coming. And that's next week. This is weird. I don't have nothing showing for this week. The rest of this week, Thursday, Friday. I guess there's nothing coming out until next week. But yeah, the unemployment coming out midweek, middle of the month is weird. Wholesale sales, yeah. Nothing terribly exciting there. So let's go look quickly at the charts. And you can see the S&P, again, kind of, yeah, it's essentially bullish on a short term. We haven't really made a higher low. I wouldn't call either one of these little, 1 or 2 day dips a higher low. We need a more significant pullback before we call it a higher low and a higher high. So in the short term, we could be bullish if it pulls back a little bit. Longer term, long term, we're still, well, kind of bullish, even though we've got a new low here compared to this one. The trend's been broken. So we are neutral at best. And I would actually call this bearish long term. You can see we got lower highs and we got lower lows. So unless it breaks out of these 2100 area, somewhere up in here, until it breaks out of there, makes a new high, or at least attacks the previous high, we're bearish. We got lower highs and lower lows on a long-term basis. Intermediate term, we're neutral. Short term, on a very short term, 1 to 2 months, it's bullish. So very mixed, which is what's making it hard. That's why we don't have a whole lot of patterns. What we've got here, though, you'll notice is we're bumping up against the 2000 level. We closed just above 2001 3 days ago, Monday, and then we sold off after that. So we'll see. I think the rest of this week and maybe early next week, we'll get a little bit of indication of what may or may not happen. If this starts to sell off, then 2000 is probably the mark that we hit. Now we're headed down from there. It'd be interesting to see. Yeah, see, that doesn't come quite in there. I mean, it hasn't quite hit it, but we could just go sideways for a week or two, hit that downtrend line, and then sell off from there. We break above 2000, then I'd get more bullish. Otherwise, it's pretty much neutral right now. So very short term, very quick turns, very quick trades. Nothing longer term, nothing significant. So we got the NASDAQ here kind of sort of bouncing off that little point right there. Yeah, nothing exciting. Light volume. Industrials, average volume. But notice on this rally that we've had, notice the moving average volume is dropping pretty significantly. It's not just slightly dropping, but it's dropping a lot. So not a whole lot of excitement in the bullishness of this market. So that right there gives us a longer term picture of bearishness. Because for 2 or 3 weeks it's been running higher, but it's been doing it on extremely light volume. In other words, there's not a whole lot of people that are excited about the upside of this market. If they were excited about it, they'd be piling money into it, and the volume would be higher. It'd be up here, where the average was back here when it was heavy, about 1.5 billion. I think that's billion, 1.5 billion, whatever it is. It should be up a good 20% higher, but it's not. So, which is an indication of weakness. Transports and all the markets are pretty much the same. Transports dropped big yesterday. A lot of stuff sold off pretty big yesterday. So, decent amount of volume. I mean, notice this on the Russell. Big sell-off yesterday. Not enormous volume, but a decent jump compared to the previous 2 or 3 weeks, which we always have to look at it relatively speaking. So, a pretty decent rally on very light volume is not bullish. So we just got to be very cautious with bullish trades and be prepared for another drop. The VIX, let me get rid of some of this stuff. Notice the VIX has stayed up in this. I think we talked about this here. And we have this time back here in January of 2007, just before the big crash, where the VIX got elevated, stayed above 17, and bounced from 17 to about 30. And it did that in 2007 to 2008 for about a year, before the market finally cracked. And we're getting a similar type of pattern now. It's a little more of a triangle. It's not necessarily a channel like we have there, but it's still kind of bouncing between that 15 and 30 level. So it's staying up in an elevated range, which could be a clue that we're about to have one of these. We certainly don't know right now. We're not sure exactly what it means, but we know what happened last time we had this type of situation. So just be prepared. That's all you really can do, and know that this is here, and there's a possibility that things turn quickly. So, beauty is, though, I mean, you see here where it turned in 3 days and it stalled out, and then it gave us another bit. So we can still catch it. So no need to panic and freak out and think we're going to miss it. So anyway, that's it for the market update, and we'll get back with the little guys as soon as possible. Maybe tonight, probably not. It's getting late. Probably tomorrow. Knock some little guys out. So, all right, we will see you all very soon. Bye-bye.